Hey everybody, it's Larry Berman here. Well, the week's finally here. We've got Nvidia earnings November 19th. The AI sector was all over the place this week. There's two very distinct camps that are developing, one that remains universally bullish, and there's a secondary camp of investors that think that there's a huge overinvestment and perhaps it's not going to be as profitable as many hoped for. That's caused a lot more volatility in markets. We saw that really magnified this week. Let's dive into the chart room and see what we learned. BAI is an ETF that is an actively managed artificial intelligence and tech play. You know, when we started Friday morning, markets got down significantly, 1%, 1.5%, close to 2%. In the NASDAQ, and then by the end of the day, reversed and closed higher, but well off the highs of the day. And, Qs and S&P basically flat to Thursday's close. So still giving the impression of weakness. So that's the active side. If we look at AIQ, which is the index passive side, obviously very similar picture, a bit weaker in terms of the close on the passive side than the active side. No important break of support yet here, pretty darn close to it. If we go back and look at the active side, we've already taken out those lows that we reversed, back above. So again, very fragile point in the market in front of Nvidia's earnings. When we look at Nvidia and we see at 190 where it closed, and we look at the calls and puts 1 week out, the 190 calls at 750, the 190 puts went out at 7. So an implied move basically of 14 bucks, 14 and a half. 8%-ish, 7%-ish is kind of where the market's pricing approximately at Friday's close. What happens Monday morning, obviously, it can be a little bit different. Depends on what we hear over the weekend. When we look at other risk indicators, we talked a few weeks ago about Bitcoin breaking the 200-day average, and that we should get some downside follow-through. We had a rally attempt back at the level. It held resistance, and we went out basically at the lowest of the week. There is no technical support until we start hitting some of these retracements and lows from the March-April volatility sell-off. And so Bitcoin's heading somewhere between 71,000 and 84,000 is my guess. I wish I knew where, but I can't imagine why anyone would be a buyer until we tested some lower support levels. That could exasperate some of the risk off in markets if Nvidia doesn't have wonderful things to say. Jensen's going to have wonderful things to say, but really, what does the market view their numbers at and their forward guidance? So that'll be very interesting. What we also heard on Friday were a couple Fed presidents and governors basically saying December is not a lock. We're inclined to take a pass. And this June SOFR contract that really is an inflection point following Powell's last Fed meeting last 2 weeks has been banging around this range where we've basically taken the probability of a rate cut down to 50-50 for the December 10th meeting. And as we go out on Friday, it's at 43%. That's just a couple of ticks on the bid ask, but nevertheless, markets based on that Fed rhetoric that we saw on Friday taking things out. So in the long end of the curve here, we see TLT go out at the low of the week, right below just last week's low. So very weak close above the 200-day average, but a very weak close in the long end. We're worried about inflation. There's a concern in the marketplace about it. Stagflation, I heard mentioned by a couple strategists on Friday that were in the media. There was a article that came out on Bloomberg about a breakout in commodity prices. So what they're looking at is this smile on the BCom index, where several times in the last 2 years, this failed at 108, 109 level. And what the commentary said on Friday morning was that we have a clear breakout above 110. And sure enough, not within seconds of that did we get this reversal. So, I think there's some massive money trying to look for vulnerabilities in the market, like we're seeing now with Bitcoin in terms of levels. Maybe there was a bunch of CTA buying in the last few days, and it looked like some big money leaned into that, maybe causing a bit of a whipsaw fail breakout for them. I think the trend and the slope is moving higher. As we've commented for a number of years now, commodity prices as a group don't tend to move higher unless you have an inflationary and growth impulse. And I don't see that right now. I see fragile economy and labor markets at the moment. So we'll see in a month or two, once we start getting reliable data again. Next employment number is going to be less than reliable, I'm pretty sure, with the government just getting back to work, and likely the surveys haven't been sent out, and it'll be incomplete data, and so therefore the error term statistically is going to be a lot bigger because it's a smaller sample size. Remember, in the last few months, most of this move up here has been gold breaking out, and not really a broad breadth of commodity price movement to the outside. Oil and gas had come off the low 60s, but really, you're not breaking out there. Crude oil front month closed at 60. So while we had a bounce, it's not spinning, it's not continuing. Natural gas is pumped up on the front month basis for the winter months as it normally does, but that's not, a price improvement. That's a seasonal pricing gap. So on the continuous contracts, it looks like things are stronger, but really they're not. And, things like copper and stuff are not really showing me, the strong economic signals that you would otherwise think if this was a true breakout. Anyways, that's my spin on things. That's kind of what I learned in markets this week. When we look at Nvidia and we look at the price pattern there, we kind of see spike up, reversal. If 180 breaks on a closing basis after earnings, we're going to get a deeper correction. To what level? Hard to say. 200-day average around 150 seems pretty logical in my mind. And it's probably a dip you want to buy. I don't think you want to fade the AI trend. You want to buy into weakness. You do not want to chase strength and breakouts. That's what I've learned in many, many years of doing this stuff now. Anyways, hopefully that's some good insight for people. Have a great week, everyone.